Hello everyone, in this video I'm gonna inform you about taxes in Spain from income from United Kingdom. I will be speaking about a double taxation treaty from Spain and the UK. Okay? Be aware that the content of this video is purely informative and has been prepared from us in order to inform you with information purposes. Okay, obviously, if you have any information or for further information, please contact us to pellicer.com. Okay, well, as I'm going to be speaking about the double taxation treaty, I will be focusing in three kind of pillars. The first one will be about what it means to be resident in Spain in order to be tax resident. And about the income tax, what kind of income should be included in the Spanish tax declaration, what kind of income should be included just purely in the UK tax declaration, and what kind of income should be shared between the inland revenue in the UK and the Spanish tax office. Okay, well, for the first pillar with about residency in Spain, about being tax resident in Spain. An individual person is resident in a Spanish territory when any of the following circumstances apply. The first one is well known by many of you, is that if you stay more than 183 days during the calendar year from the 1st of January to the 31st of December in the Spanish territory, you are considered as a Spanish tax resident. That could be one of the issues, one of the conditions, and to determine this period of residency from the 1st of January to the 31st of December, those sporadic absences may be taken into account into the period, unless you prove that you have a tax residency in a different country. Also, be aware about those days that you are in the airport, that you land into Spain or you leave Spain, if it counts or not into a day that counts into a residency for tax purposes. Okay, well, regarding this first condition, is well known about these 183 days. There are a couple of two more conditions that may conduct you as a tax resident in Spain. If your main nucleus or base of your activities or your economic interests are located in Spain, directly or indirectly, then you may be considered also as a tax resident. Imagine that you may take in Spain less than 183 days, but all of your economic interests and your sources, your nuclear economic center, it is in Spain, you may be considered as a tax resident in Spain. Okay? So first one, 183 days. Second one, about economic interest, nucleus of your financially, social, economic situation in Spain. But also, and that is a question is done by many clients, is what if I'm not resident in Spain? What if I'm not tax resident in Spain, but my family is resident in Spain? And this is the third condition, really. If it's your spouse or your children, your family are living in Spain, you may be considered also as a resident in Spain, as a tax resident in Spain. Take this condition as a presumption. I mean, this third condition is it is assumed that if your family is living in Spain, then you are living in Spain. So it's a presumption that if you are not really resident in Spain and you are not tax resident in Spain, you will have to prove that you are not tax resident in Spain. Okay? Okay, well, about residency in Spain, whenever you are resident or non-resident for tax purposes, is explained. And let's go a little bit more focus on the income tax. What kind of sources, what kind of income needs to be included in the tax declaration in Spain? If you're an individual in accordance to the tax residency rules, is subject to the personal income tax. In Spain, we call it IRPF, which is Impuesto Renta Personas Físicas. Must pay taxes in Spain when someone is resident in Spain, tax resident in Spain, on your worldwide income. So you must declare in Spain income obtained anywhere in the world without prejudice to the provisions of the agreement to avoid international double taxation, signed in this case between Spain and the UK, or the country of origin of the income. Okay, and all the conventions have list like certain types of income and provide in respect of each type of income, which is the government, which is the country that has to tax in each kind of income. In some cases, exclusive powers for the country of residency of the taxpayer. In this case, if you are resident in Spain, the country of the residence of the taxpayer will be Spain. In some other situation, exclusive powers have to be paid taxes in the country of origin of the income. For example, if a resident in Spain, citizen from UK, gets some income, in some cases will have to be paid just the taxes in the UK. And finally, in some situations, the taxes are shared between two countries, with both countries being able to tax the same income, but with the obligation for the country of residency of a taxpayer to take measures to avoid double taxation. Okay. As I said before, personal income tax period is a calendar year, and from the 1st of January to the 31st of December. Okay, the income tax return. Okay, let's focus right now some specific income. Well, in Spain, the income tax return of any individual which is resident in Spain is done between April and June, ends on the 30th of June, and it starts at, let's say, mid-April, more or less. So this IRPF, this tax declaration, regulations, the rules, regulate certain limits and conditions to determine the obligation, your obligation, you have to file a tax return or not. There are some exemptions which changes every year that may conduct you to have the obligation to declare, and in many cases you to have the obligation to declare. Okay, let's go to like an example. Imagine that someone is resident in Spain, is receiving some income from a pension from the UK, rising from working from a company in the UK. In this case, as I said before, in this case Spain has the sole power to tax this kind of pension, as it is treated as a private pension. And if the pension exceeds to the amount that at this time is the threshold per year, then in accordance with the limits and conditions of obligation, maybe you don't have the obligation to make the tax declaration. Okay, this is just an example. Obviously, there are many little words, many specifications on that in order to be able to check if it's an obligation or not. Let's go to the Spanish-British agreement. It was approved on the latest amendments on the 14th of March 2013, and the text of obviously about this convention can be checked obviously in the internet. You just Google Double Taxation Treaty between Spain and UK, English or in Spanish, and you will be rapidly get on that. On a simplified basis, and taking into account the provisions of a Spain-UK tax convention, Double Taxation Agreement, DTA, the taxation for tax residents in Spain and of the most commonly obtained from UK source, income will be as follows. Let's start with the pensions. The pensions, understood as remunerations that arise from previous employment and could be treated differently depending on whether they are public or maybe they are private. What is a public pension according to this convention, according to this agreement between Spain and UK? Well, if you Google this double taxation agreement, you will see that in Article 18.2, it says that the public pension means a pension that received by reason of previous public employment. Pension received by full services rendered to a state, one of its political division or subdivisions, or any local authority. A civil servant, for example, is a well example which we deal in many occasions. In general, public pensions would only be taxed in the UK. That's extremely important. I mean, I know that many clients that we have, they know, but I would like to be, let's say, clear with this. But, and this is something that I try to explain many times, and I hope it's understood. In Spain, it's exempt these public pensions, but with progressive exemption. What does mean, this progressive exemption? Well, this means that if you are obligated to file a personal income tax because you have other income, other kind of income, the amount of the exempt pension, which is the public pension that you receive, is taken into account in Spain when you have to calculate the taxation of the other income. Let me make an example. You have some public pension which is exempt, but also you have some private pension which is taxed. If the amount that you receive on the private pensions obligates you to declare, then we add the public pensions into the private one to get a percentage on the scale to be taxed the private pension. So it is not purely exempt. It is exempt, but in case that you have to declare because of your private income, then will increase probably on the scale to be taxed on the private pension. Okay, however, if the beneficiary of the public pension resident in Spain has a Spanish nationality, such pensions will only be taxed in Spain. So the public pension gets from the UK government, and if he's a Spanish nationality, will not be taxed in the UK, will be taxed in Spain. Okay, so this is mainly the public pensions according to the Double Taxation Agreement. Let's go through the private pensions. Article 17. What private pension means is well, any other type of pension received by reason of previous private employment, as opposed to what has been identified as public employment. An example, a pension received from Social Security by a private sector employment worker. Okay, those ones, that private pensions, will only be subject to be taxed in Spain. Okay, and let's go through another kind of income, the ones that you receive from real estate. Article 6. Income from real estate which is situated in the UK can be taxed in both countries, in Spain and the UK. The resident will be entitled to apply for deduction for international double taxation in Spain for personal income tax purposes. So it will be able to be taxed in the UK, but will be able to be deducted whatever is paid in the UK in the tax declaration in Spain. Okay, let's go to another kind of income, let's say dividends. Article 10. Okay, in this case, the UK sourced dividends may be taxable in Spain in accordance with its domestic law. Such dividends may, in general, also be taxed in the UK. If the UK is the state in which the company is paying the dividends, is resident and according to its domestic law, then will be able to be paid in the UK and then will be able to be deducted also in Spain. Let me make an example on this. Well, let me go through the specific percentage. Let's say that the beneficial owner, which is resident in Spain, the tax that needs to be paid in the UK or should be paid in the UK maximum will be limited to a maximum of 10% or 15%, 10 to 15% of the gross amount of the dividends. So if it's paid in the UK, then the resident in Spain will be entitled to apply in Spain for personal income tax purposes the deduction for international double taxation, as we said before. Okay, dividends. What about interests that you may receive? Article 11. Interests that you may receive from UK source, the beneficiary, which is in this case you are resident in Spain, can only be taxed in Spain. Okay, so we said dividends can be taxed in the UK. We have some maximum percentages, but interest not. Interest will be taxed purely in Spain. Okay, some other kind of income that we have from different clients, or also regarding remuneration of, for example, if you are a board member of a UK resident company, I think the article is 15, can be also taxed in both countries, in the UK and in Spain. And obviously, you will be able, if you are in this case, you will be able to apply for deduction for international double taxation with a tax declaration. Again, I'm insisting, the name is IRPF, Impuesto a Renta a Personas Físicas. It's a tax declaration. Okay, some other kind of income. What if you are resident in Spain and you get a capital gain? For example, from a real estate, Article 13. Well, the gain obtained from real estate located in the UK can be taxed in both Spain and the UK. Also, whatever needs to be paid in the UK then will be deducted in Spain in order to avoid double taxation, according to the Double Taxation Treaty. It's important that, and we also informed clients to plan whenever they want to move and sell properties, if this property is permanent home, in order to plan if it's going to be reinvested or not, then we'll be able to get benefits in order to be exempt those capital gains. But you need to take into account that if you has passed more than 2 years when you moved into Spain and then you sell your home that was your permanent home in Spain, you will not be exempt in order to pay capital gains tax. So it is important to plan, to make a tax planning on these situations when you want to relocate and maybe you want to sell your property in your home country and then to come to Spain and buy another property which will become your permanent home. Okay, apart from the capital gains that you may get from real estate, which are the most common ones, I have to say, also there are some other capital gains from other kind of assets, let's say movable assets, and these gains are again could be taxed in the UK, but also will be able to be treated in Spain as with the Double Taxation Treaty to deduct and not pay double taxes. Okay, let's move on to, we spoke about dividends, we spoke about interest, we spoke about public pensions, private pensions, about remunerations, about the board members, capital gains and real estate, which is also said in the convention, and movable assets, which is, as I said, could be taxed in both countries. The taxpayer, I mean, you will be able to deduct whatever you paid, in this case in the UK. Okay, well, as we said, first pillar was the residency. These three, let's say, conditions that we said in order to be called as a tax resident in Spain. And second pillar was about the income tax declaration according to the Double Taxation Treaty. There is some other income, like shares, for example. What happened with the shares? I have some shares in some company in the UK. I think it's Article 13. Also can be taxed in both countries. That you will have to pay taxes in the UK and then deduct it in Spain. And Okay, let's move on. So there are some other kind of income derived from business profits. Remuneration from work. Imagine that you are working, you're still having a salary. Also is treated in the double taxation treaty. Artist or sportsman, public functions, you still are having some functions on public, or no other kind of income. In most of situations is treated under the convention between Spain and the UK. Okay, well, let's go just to finalize the third pillar, which is once you become resident in Spain, you have to declare your worldwide assets in some specific conditions. So you need to report to the Spanish tax authorities on 3 different categories your assets and rights located abroad. Okay, first ones are bank accounts or in financial institutions which are not in Spain, are located abroad. It's always this information you are giving it about information that is not in Spain, is abroad, about your assets. First one's accounts. Second one will be like securities, right, insurance, investments, let's say that. And the third one will be property, property located abroad. When you have a property in the UK, for example, or any country, you will have to inform tax office that you have this property outside Spain. This obligation must be fulfilled. It is called Modelo 720 or Modelo 720, and needs to be done between the 1st of January to the 31st of March of the year that you are, of the following year that you become tax resident. And if you don't have to do this every year, but if you make some changes, for example, if you cancel an account or you sell a property, or there are some main changes on the assets that you have abroad, you will have to inform tax office. So will not be obligation to report each category every year, something like that. Obviously, one of the conditions on that, in the 3 pillars, I say investments, the bank accounts, and the property, if they are more than 50,000 euros. A property is the purchase price on property. Okay, and that is the information regarding the double taxation treaty between UK and Spain. I hope you find this video helpful for you in order to understand a little bit more about your situation whenever you become resident and tax resident in Spain. And if you have any question, we will be very happy to assist you personally, telephone, or by video conference. Thank you.